Welcome back to my channel, and today we are trying a new format when I'm trying to make a video without previously created script and reviewed by AI and without prompter. Everything goes live, everything goes with one shot, so my apologies for that. I have to train my public speaking. So today we are covering the next topics. It's a grid step size selection. Second one is a single moving average technical indicator, and as a result the consolidation zone detections, and additional topic, grid ranges fix. So what's a fuss regarding the grid step size? If you can remember what the grid trading is a set of grid levels within some kind of price of range. And the idea is that the bot is going to buy and sell, buy and sell, buy and sell on those ranges. So once the price goes down, the bot is buying, 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 and once the price goes up, it's selling all the way up. It's happening when the bot is working in the long trade modes. When it goes in short grid, in short mode, everything goes in the opposite side, but you get the idea. What the trick is to choose the grid step size. If you have huge step, it means now you are not having a grid bot, now you are having just a DCI strategy. So you are just buying in some kind of steps. And you should have some kind of step in which the bot trades are triggered once or a couple times in a day. But you don't want to have this grid step too small, because with a small step you will lose all your profits and commissions. And it's always difficult to calculate what kind of step should it be. You shouldn't be way too much greedy to set lots of steps, and you should be generous enough to have wide steps, but those steps should trigger any trades. So it was a question for me for a long time, and I've spent maybe last year or 2 years on grid trading. And now on this channel we are doing everything using software, programming in particular, and using the AI. And now I have a advantage of time and advantage on effort to do it in the in the best way possible. So the market dynamic is always changing. It means the rule is not exactly the same rule is not applicable all the time, so you have to have some kind of adjustable rule. And the idea I came up is to have a statistic on the price movements for the last period of time. So Colossus is building its judgment on the last 200 candles. I'm calculating MACD, RSI, moving average. I'm checking the inflation rate, but I'm taking the time period of 200 points of 4-hour step. So what I actually can do, I can take the last 100 candles and build the difference between the previous candle lowest price and the next candle highest price. Then what I can do, I can sort these price differences, so I will have just a sorted array of price differences. Obviously I'm gonna have outliers on one side and the lowest ones, and the highest ones on the other side. It's when we have huge sells or huge buys of the coin. Those are outliers. Those steps are happening, but they are not for us. What we are looking for average. And here statistics comes in place. I very much regret not having statistics lessons in my university, or I just have forgotten about them. But anyways, if you ditch the outliers, you will get a number of the average or median price changes. And what exactly I can take? I can take the medium change between lower and the higher price. And that's exactly what I have done for the calculation. So now the EI is providing me the lower and a higher range of the grid. I have candles. From those candles I'm calculating the median difference between the lower and the higher price of the candles, and all I need to do is just divide the range by the price, and now boom, I have pretty much flexible and reliable way for calculation of the grid's number. I'm utterly happy with that solution, and it proved itself pretty much well. I'm running it for last 2 weeks. Check out my shorts. The last 2 trades, they've been completed with this new strategy of grid step selection. It's actually beautiful. It's actually beautiful, and I'm completely happy with how it works. Once again, subscribe for the channel. It's gonna be in description, so you're gonna see the news aggregations and the trade setups created by AI. It's working wonderful. Next topic is the consolidation zone detection. So what is a consolidation zone? The consolidation zone is a corridor where the price is going up, down, up, down, up, down. So the market players, they are consolidating on some kind of price level, and basically you're having the price fluctuations within this zone. And last week, 2 weeks ago to be more certain, once again check out the shorts. Check out the shorts. I had to sell within the consolidation zone, because in scope of the consolidation zone we had a local drop, and Colossus triggered the signal to cut losses. Exactly, that's a goal of Colossus, to make you trade as safe as you can and do only the obvious move. If it's obvious buy, you buy. If it's obvious sell, you sell. By sell, I mean cut the loss. And what it failed to recognize the consolidation zone, and it had brought me to the new challenge of defining and calculating this consolidation zone to make an educated decision for Colossus to tell you if you are in a consolidation zone, so you can wait a bit, don't close your trade, but close the trade. Obviously it's going to be a risk and potentially you will lose more money, but eventually the idea is to cut losses a bit later, when the price will breach the consolidation zone price. In score, if you're talking in terms of long trade, it's going to be a lower consolidation price. And that's how I done. How exactly it was done? That was the goal, but how exactly it was done? We need to define the consolidation zone entrance. And consolidation zone can be considered as a V-shaped figure. So we have one extremum point, we have second extremum point, or we are having a third extremum point. It can be Latin A or V. So we are looking for a V-shaped. But how to define it, how to find it? In case of candles, it's pretty much difficult, because candles are producing some kind of noise. And to smoothen this noise, we have the very much simple technical indicator, which is simple moving average. Simple moving average is utterly simple to calculate. What you do, you're taking the last n points. Let's say we are talking about SMA 10. It means you're taking 10 points, 10 prices, and calculating their average. So you have the average price. And as a result, when you're calculating the simple average, you have the very same price movement, but smoothened by the average price. So you are capable to see or distinguish or calculate the extremum points. And extremum points is points when the price is changing direction. And with the help of AI, it was very simple to calculate. It's a very clever solution. So the extremum point is a point which is higher than previous n and next n points. In my case, it's higher than previous two and higher than next 2 points. Brilliant solution. And the second thing is not only choose those extremum points. Next thing is to see the V-shape and see that this V-shape is within the symmetric size. So V entry and V exit is on the same level. Obviously the price is not going to be the same, but divergence should be in around 1 or 2% of the price. And the last thing is when we are reaching up the V-shape. So we are entering V-shape, then we are staying there, now it's a W shape or WW shape, and eventually we are leaving the shape. It means the consolidation zone is over. So now I have the V-shape calculation. I hope you get the idea, and it's absolutely brilliant, and I will shortly add this into the Colossus decision making. Once again, subscribe for our channel, it's gonna be amazing. And the last thing is the grid ranges fix. If you subscribe for the Telegram channel, you will see the recommendations, and usually it was the grid range within the something around 30% of current price. So we have a price, let's say for Bitcoin, let's imagine $100,000. Yes, it's not true today, but let's hope. And it can be plus and minus 15,000, let's say from 85 to 115. What the problem was, and what was my initial design, so we are entering the grid, price goes down, and let's assume the price goes down to 90,000, or let's say we hit the bottom 85. But with Colossus it's pretty much not reliable strategy, simply because when we are having such drops, the AI agent signals cut loss, so I have to cut losses, and I have to listen to it, because previously all my previous mistakes were made because of my belief that price will go up, and it never did. That's why I'm building this tool, that's why I want to share this tool with you. And eventually I have to listen for it, and I don't need to have that much wide grid range anymore, because the capital which is under the entry price, let's say 10 or 15% under the price, will never work, simply because I will get the cut loss signal way much before the price hit it. So if you are entering the trade at 100k and the price will drop to let's say 86, I will definitely get cut loss signal and I will have to cut. So the bottom 10k will never work. That's why I have shifted the boundaries. Well, that's it with our today's agenda. Hopefully you did like it. Share in the comments below, did you like the new format? Do you like live performance? I definitely did like it because I'm not wasting a ton of time on script preparation to see 100 views as a result. See you in the next video, and subscribe for channel, subscribe for the Telegram channel, and yeah, watch the Colossus trade shorts.